I record it. So, so this section is about disposal of asset. Okay, disposal of asset. Okay, so what I'm going to do is I'm going to show you first a video I made. Okay, it's only like very short video, probably about 2 minutes. Okay, so I want to show you this video I made. Okay, so where is it? Here. So this is the YouTube channels where I post all the accounting lectures. So here, so this is the video about.
In this video, I'm going to show you the
Are you able to hear?
For disposing a depreciable asset. Suppose we have a building. The cost of the building is 500,000, and the cumulative depreciation is $210,000. So let's set up the T account. Okay, the building have a debit balance of 500,000, so it should be on the left side. And the cumulative depreciation, T account, have a credit balance. It should be on the right side of the T account. So suppose the seller and the buyer make a deal, and the buyer will pay cash 400,000. Let's take a look at the journal entry on the seller's side. So the seller received $400,000 cash. The seller is going to debit cash for 400,000. So now the building account should be 0 because the seller does not own the building anymore. Therefore, we have to credit building for 500,000 to make the building T account have a 0 balance. Similarly, the cumulative depreciation building account should have a 0 balance. So we have to debit this account for $210,000. Okay, now, as we know, for each journal entry, the total debit has to equal to total credit. Total debit equals 610,000. It's more than 500,000. The difference is 110,000. So that's the additional credit we need to make. And that's going to be a gain on the disposal, 110,000. Okay, I hope you have enjoyed this video. See you next time.
Okay, so that's the one. Just give me 1 second. How can I get out of this? Okay, good. Does this video make sense? Did I? Does it make sense? So basically, when you dispose an asset, okay, you are likely to receive cash, right? Unless it's worthless, right? So when you receive cash, you debit cash, right? Your cash balance increased. And then because you sold your asset, you have to close all the asset related accounts, right? So there are 2 accounts related to long-term asset, right? The cost account and cumulative depreciation account, right? So when you sell these accounts, when you sell the asset, right? After the sale, these 2 accounts should have a 0 balance, right? 0 balance. And then you're going to know that, okay, before the sale, the cost account have a $500,000 debit balance. How can you make it to be 0? Okay, you have to credit $500,000, right? To make it 0. Similar idea for the cumulative depreciation. So you have a credit balance, 210,000, okay, before the sale, right before the sale. And after the sale is 0, right? You don't own the asset, right? There you don't have those accounts. So that the balance should be 0. So therefore, it's debit, right? $210,000, right? And then you want to balance off the total debit and total credit. If you need additional credit to make it balance, that means you need to credit a gain, right? For gain is a credit. Feels like a revenue, right? Something you earned, you credit the gain. But if it's a loss, it's kind of like expenses. You debit loss, right? If you need additional debit to make the equation balanced, you debit loss. If you need additional credit to make it balanced, you credit a gain. So in the video, I give you an example of a gain example, right? But it's possible it could be a loss, right? It could be a loss. So for that video, does it make sense?
I think so, yeah.
Yeah. Okay, good. Okay, so back to this question. I'm going to just give me 1 second. I need to use a Excel sheet. So what happened is I noticed that a lot of students were busy with midterm, so they were behind. They didn't have time to watch the videos, the lecture. So I thought, well, then maybe it doesn't help if I give you a lot of time for your own exercise. You haven't watched the video yet. I better just do the lecture here. Okay. So just give me 1 second. So for this one, make it bigger, view. Can I do it bigger? No, not this one. 200. Okay. So here we learned that in this question, we were told that this company, Spectre, uses straight line. So for those of you who don't know, we are working on E9-7, okay, on page 503 of our textbook. Okay, so I will make it even bigger, just it's easier for you to see, okay? Oops. Okay, so this company, Spectre, use straight line amortization, straight line depreciation, right? So on Monday lecture, I have shown you what is the straight line depreciation, right? Can anyone tell me how do we calculate straight line amortization? So equals something up on there is a division, right? It's a division. So you have a numerator, denominator. What is the numerator?
Your carrying value divided by the years of useful life.
Carrying value, okay? So Tyler said it's a carrying value divided by the years of useful life, okay? Anyone else? Anyone else have a different answer? We have to be very accurate, right? Technically, we have to use the correct wording, right? Anyone else?
Would it be
So Tyler is half right, yeah.
Okay.
Is it depreciable amount?
Depreciable amount, okay, very good. Depreciable amount. So here should be depreciable amount, right? So you do, in one situation, you use carrying value. Do you remember for which method you use carrying value? So this is for the double diminishing balance method. That's the time you don't talk about depreciable amount. You are using carrying value times depreciation rate, right? For straight line depreciation, you use depreciable amount divided by the number of the years of useful life. Can anyone tell me how to calculate depreciable amount?
total cost minus residual value.
Okay, minus residual value. Very good. Thank you. Okay, so in January 1st, on January 1st, okay, they sold a truck. Okay, they sold the truck. They sold the cash sold a truck for 18,000, right? What's the cost of the truck? Truck cost is 62,000. Purchased on January 2015, okay, 2015, and 4 years useful life, and residual value 6,000. This is all given in the question, okay? This is all given in the question. Okay, so now I know my total cost is, that's the cost you paid originally when you purchased on January 2015. So that's 62,000, right? Minus your residual value that's provided, 6,000. So the depreciable amount is 56,000, okay? So your annual, and it's for how many years of useful life? Here, the years of useful life. So that's 4 years. So what's the annual depreciation? Annual, okay, straight line depreciation will be, you know how to do this, right? You use depreciable amount divided by years of useful life. So every year, for each year, right? For each year, this is annual amount for each year. Okay, so we need to know, okay, we need to know this cost is always 62,000, right? Cost is always 62,000. We want to know, okay, immediately before the sale, what is the cumulative depreciation on the truck? Okay, so from the day January 2015, the purchase day, to the day of the sales, which is January 1st, 2018, right? 2018. How many years has passed?
3.
3 years, right? So 3 years has passed between the purchase date and the sales date, right? So for the cumulative depreciation, what's the balance? The balance of cumulative depreciation, that's the credit balance, should be what?
42,000.
Very good, right? So it's 3 years, right? And remember, each year is 14. So for 3 years, so the accumulation is 42,000. Okay. So now, let me do this journal entry, right? Let me do this journal entry. Remember the video, right? I have shown you the video. First thing, what are you gonna do in the video? What do I do in the first thing? For the journal entry, the very close to the end of the video, I made the journal entry, right? What is the first thing I did?
You made
What's
a
the
T chart?
easiest? Pardon me, Joshua?
You made a T chart?
I did a T account, right? Okay.
Yes.
Yeah, let's do a T account here. So how should I do this? Okay, let me do this way. T. Okay, so these are not that obvious. Just give me 1 second, okay? Just let me fix this. Okay, so line, color, style. Okay, so that's a T account, right? So for this one, I'm going to do with the building. Okay. So okay, so how did I? Okay, it's the pencil. Okay, just give me 1 second. So how did I get? Okay, so what happened? Let me try this. Okay, so for this one, I'm going to have a, sorry, I'm going to have here is gonna be my truck. And the left side is a debit side, the right side is the credit side, okay? So remember the cost is 62,000, okay? So that's the truck. So here, for the cumulative depreciation, truck. This one is a credit balance of 42,000, okay? So now I sold the truck, okay? January 1st. I sold the truck. What should I debit? I received the money, remember? I don't give it out for nothing, for free. So if you receive money, what's your journal entry?
Debit cash.
Yeah, debit cash, very good. And you sold it for 18,000, right? So you get cash of 18,000. So now, after the sale, okay, this balance should be 0, right? This balance should be 0 because you don't own the truck anymore. It's not your truck anymore, right? And this balance should be also 0, right? How can you make this T account 0 balance? So right now they have a debit 62,000. The only way you can make it 0 to be 0, you have to credit for the same amount, right? Right? So now let's credit truck. This is the cost account for 62,000. Okay. Similar idea here. Before the sales, you have a credit balance of 42,000. Okay. After the sales, you have sold the truck. So the balance of this two accounts is 0. You don't have this truck anymore, right? Anything related to the truck should have a 0 balance. So the original balance is 42,000 credit. In order to make this account to be 0, you need a debit, right? You need a debit. Oops, so slow. You need a debit cumulated depreciation, right? Okay, and this would be 42,000, right? Okay. So the next step is to make this journal entry balanced, right? Remember, for every journal entry you make, the total debit has to equal total credit, right? So you can take a look, my total debit here. The total debit is 60,000. And what's my credit here? 62,000. So do I need additional debit or additional credit?
Additional debit.
Additional debit, right? Additional debit. Okay, so I need a debit. And how much do I need to debit?
2,000.
2,000, right? 2,000. So now, okay, now this all add up to be 62,000. So the total debit equals total credit, right? So when I debit, do I debit the loss or debit the gain?
gain.
Debit gain. So think about the expenses, right? When you think about the expenses, you debit expenses. Expenses is kind of like a sacrifice, right? So it's a loss here.
Yeah.
Yeah. So you debit loss, right? So loss make you lose money, right? Gain make you earn money, right? Gain is like revenue, right? You credit revenue, so you credit gain, right? Revenue make you have more resources, right? So that gain. So you credit gain, credit revenue. So loss make you have less resources, right? Just like expenses, right? You have to sacrifice your resources. So therefore, you debit expenses and you debit loss, right? Okay. So this is the question, right? This is the journal entry for January 1st. Does this make sense?
Yep.
Yeah. Okay. Do you want to try on September 1st? Okay. So now I want you guys. So now I think I can send you guys to a breakout room, right? You have understand a bit on this. Actually, just do it. Yeah. There are only 19 students here, 16. Yeah, please do September 1st. Do September 1st. So I'm going to stop recording for now, and then I will resume recording later. Okay.